Most traders enter just because price hits the area. They have no exact criteria or model that they can follow consistently, hence they remain consistently unprofitable. You see, I don't. Once price comes into my area, I have to see one or two things. I wait for a break of flow with participation or a retest. If I don't get either, then I'm not going to participate in that trade. In this video, I'm going to show you the exact entry model and criteria that's allowed me to remain consistently profitable. And by the end, you'll know what a break of flow means in my model, what makes it valid, and when I take it versus the retest. This has allowed me to have multiple consecutive payouts. And this exact trade that you're seeing right now, I actually called it out hours before on my Discord, and I've been doing the same. Unlike many people on YouTube, they would rather show you cherry-picked setups to fit their criteria. However, for me, I'm going to show you the exact live setup that I'm currently in right now. And I actually put this into my Discord at 1:48, and here's my analysis on it because I'm really about that. And I'm currently in that setup, and it's done exactly what I called out. So let me tell you the exact thing that I look for. All right, so the biggest mistake that traders make is that they treat the area of interest, which is either where they look to buy from or sell from. For me, mine's always highlighted in purple, as an immediate entry, as opposed to an area where you want to look for confirmation. So what do I actually mean? Okay, so last Tuesday on Nasdaq, we had a break on NYSE open, and it was also continued into new lows. So the immediate bias would be to look for shorts from within here, my area of interest. But here's the mistake. So now price has actually engaged my area. I want to go down to the lower time frame. Now, this is the mistake that many people make. They immediately go in for shorts because they've never been taught defense, and it's always aggression. So because they're immediately in the short, price is going down. Yeah, they get in. And I saw this so many times, and honestly, it's stupid. For me, I couldn't even get into this trade if I had no break of this. So that's exactly what I'm going to teach you, because consistency requires you to take less unnecessary losses, not always about the wins, despite what the industry tells you. All right, so we're going to do some quick theory before we get into the live setups that I've taken. How does it begin? So first, I look for an area of interest, right? In simple terms, that's just an area where I look to consider for buys or sells. That does not immediately grant a reason to execute. So now price is actually engaged into my area. And let's say that this is the M5 time frame. I'm going to go into the M1 now, right? This is actually so simple that I'm confused why nobody knows this. So we're on the M1, and the first thing that I want to see once price engages my area of interest is a break of the supply that created the last low. If we was looking for a sell, obviously we'd want to see the demand that created the last high. But in this scenario, it sells. So this is the supply that created the last low, right? Now, once price enters my zone, I need to see something like this, a break of that supply. But this isn't enough, but this is what I call a break of flow, where flow has changed from selling to buying dominance. But this alone does not constitute an execution. There is something that you need to see within the candle behavior, the candle anatomy, to further validate the reason to execute once we see the mitigation of the area of interest. Okay, so let's look at the candles now, right? So you see a break of flow. So that's the supply that created this last low into the mitigation of my area of interest. And as you can see, it's continued further. Now, this is where the second part comes in. So now you've got the break of flow, which is here. There's the second part that needs to also meet the criteria, which is participation. Now, participation is where you see volume come out alongside intent. So I need intent, which is a break of flow, switch of control from buyers to sellers, sellers to buyers, and participation volume. So who is this? This is the big players, the ones that engineer price. How do you know if it's participation? Well, let's go into the candle anatomy. So you have imbalances. As you can see here, there's a clear imbalance from within this mitigation, and there's continuous buying with no pullbacks really. It cannot. So as you can see, imbalances here, but then immediately switches. So you can constitute this on a lower time frame to be the big three. Now there's two plays. You'd either take it on the break of flow, so the immediate break, and your stop loss will be below this, or your area of interest to be safer, or you wait for a retest back into here. So this block here, my secondary area of interest, to then look to continue. All right, so in short, we have a type 1 entry, right? And all of that is what I just previously discussed, is where we see a break of flow from a mitigation of our area of interest with participation. So imbalances, large candles, and it breaks. Or we have the type 2, and this is my preferred method of execution because it allows price to develop within my area of interest before I choose to deploy cash into my position. So type 2. That's a break of flow exactly like type 1 with participation, but we look for a retest instead. So we get a break of flow with participation, clear imbalances, large candles from our area of interest back here. Price comes back down because it usually does reverse. It depends on the volatility of that day. So sometimes it warrants that caution and it comes back into my area of interest, which will be this block right here. I will do another video explaining how I define my area of interest. Again, nobody's doing it like me in terms of that way. And you can take it on either the first touch of your area of interest within here, or you be safer and you wait for the extended break with participation. Now, this is how you start to become a lot more consistent, because now you have a set criteria, a rule-based criteria. Number 2, you're now waiting for price to develop and come to you instead of you chasing it. And number 3, you ain't going to do anything until you at least see this one, type 1 or type 2. And again, remember, they both need this. So this is what I use every day. And this honestly avoids so many unnecessary losses, because now you're not taking it on the immediate touch. You're actually waiting for it to engineer into development, into 1 or 2 to constitute that execution. So we're going to go over 2 examples that both was actually called out in my Discord beforehand for free, so you can see my exact methodology before I take the trade. So I'm going to rewind it just for the sake of educational purposes. Okay, so the reason for this trade is that we had an extension into new trend highs going into NYSE open. However, it did mitigate my higher time frame liquidity pocket that I did say that if it engages into this zone, then the chances of taking a trade decreases dramatically. However, okay, example 1. The reason why this constitutes a potential trade is because we had an extension into new highs. However, it has come into my higher time frame liquidity pocket that I did say within my analysis that if it engages into this zone, we could see immediate shorts, sellers repositioning into new lows. However, going into New York Stock Exchange, there was a clear imbalance and intraday was still bullish along with the higher time frame. So if price was to re-engage into my area of interest, then I'll look for a type 1 or type 2, if provided I would engage into the trade because there's so much bullish momentum going within my direction. And we can still come higher up here. So the reason for my zones, the target was that we had a clear imbalance here, which is kind of the expansion point that ultimately led to this new high. We have my refined point, my refined zones where we can look for that snap entry to drastically maximize my RR back into the higher day above here. So I'm going to go to the M1. Okay, so my M1 is located all the way above here. So I couldn't even engage into this trade until we have a break of the supply that ultimately created this low here. And again, it hasn't really engaged in my zone, so there's no trade and I don't need to take it because it's Friday. So price never broke my supply, so I can anticipate it to come all the way back into my zone or break it. We have a new supply, which is my immediate supply that created the last low right here. And actually, I believe that one is forming. Okay, so we did have the supply and this is where I execute the trade. Type 1 entry. Because we had a break of flow with a clear imbalance, which is volume from my refined point of area of interest. Now, if you want to be a lot more safer, then you're going to wait for the retest for it to accumulate. You want to see demand establishing and not really going any lower than this point here. My stop loss is below the area of interest, the low of the day, because we want to be secure. And if it does violate this demand, then you can reduce your stop loss, reduce your position by 50% or close out and look for the re-engagement back into here, something like this again. Again, risk management, it all leads into the same thing. Okay, so we've had an extension into a new one. So now we get an expansion, an imbalance, which is where I execute the trade. And now if you're wanting to get into this, you're going to want to see something come back into here. So you want to see it come back into this area of interest, imbalance. This is the candle preceding it, which created this last high. So you're going to want to see this for a type 2 and then re-engage on the break and then look for something. So price is re-engaged, but there is no supply. Now you can take it on the initial touch, which is just that. Or if you want to be safe, wait for supply to form back into here, but not go any lower than your demand, and then take it like. So we have a supply formed. So if you can see a break of this, which would be a type 2, and it hasn't gone any lower than the thing, so then that would also constitute an execution. So you get in, it still stays below your demand, so you'd be fine if your stop loss was below here. Wait for this break, and you get in. That's how easy it is, guys. So a quick CTA, if you want to join my mentorship and actually become consistently profitable, then the link is down below, because I've been doing this for years. I never sold a course, I've never done no signals. I really put in the time and effort, and I went from being in a warehouse to finally being able to travel the world and doing this consistently, day on day, putting my analysis on the line, letting everyone see it for free, because it can be done and you can become consistently profitable with the right guidance. So please subscribe and leave a comment what you want to see next in the next video.